Welcome to the deep dive. Today, we're taking a close look at Adobe, the tech giant that's pretty much everywhere in digital experiences.
Absolutely. They're huge.
Yeah, and we've got their 2024 annual report right here. Our plan is to really unpack it, look at their different business areas, see how they performed financially last year, and figure out, where they're headed.
So digging into the trends, their growth plans, financial health, and importantly, how they're planning to create value for shareholders.
Exactly. We want to get beyond just the surface numbers. Okay, let's dive right in.
Sounds good. What jumps out first is how they structure things. They get these three main segments, right? Digital media, digital experience, and then publishing and advertising. And they're quite different beasts.
Yeah, maybe we should start there. Break down what each one actually does. Let's begin with digital media. I feel like this is the Adobe most people interact with.
Mm-hmm.
It's all about content creation, publishing documents. So Creative Cloud, think Photoshop, Premiere Pro, Illustrator, and Document Cloud, which is Acrobat, Acrobat Sign, that sort of thing.
Right. And the opportunity there is just massive, and it keeps growing. The report highlights this relentless demand for digital content everywhere. Plus, you've got AI, especially generative AI, changing how things are made.
And collaboration too, right? More team-based work.
Exactly. That's a big trend influencing the tools people need. So Adobe's strategy is basically to be the leader, the go-to platform for both creative work and digital documents. They talk about using data to understand customers better and this idea of product-led growth.
Okay, product-led growth. Can you unpack that a bit? What does that actually look like for Adobe?
Sure. It essentially means the products themselves are designed to be so good, so intuitive, that they basically sell themselves and encourage people to use them more, upgrade, stay loyal.
Makes
So their initiatives reflect that. They're talking about like redefining the creative process in Creative Cloud, not just tweaking things. And they're really pushing Adobe Express to bring in newer creators, people who aren't necessarily pros.
democratizing it a bit.
Yeah, exactly. And then with Acrobat Pro, it's about adding more collaboration features, e-signatures, making it a real hub for document work.
And AI seems woven into everything now. They're putting it in their main products, new models for images, vectors, even video. Firefly is their big bet there.
It is. Firefly is their family of generative AI models, and they're making a big point about it being commercially safe and ethical.
Why is it such a big deal that they're building their own models, like Firefly?
A few reasons. It lets them integrate the AI really deeply into their specific tools and workflows, tailor it perfectly. And second, that focus on commercial safety and ethics is crucial. They're trying to tackle worries about copyright, bias, the responsible use of AI.
Right, the legal and ethical minefield.
Exactly. The report mentions specific things like Firefly services for automation, custom models so brands can train it on their own style. Firefly Video is in public beta, and the new Firefly Image 3 model, which promises big jumps in quality.
So beyond the core tech, what else are they doing strategically in digital media?
Well, pricing is one lever. They're actively trying to migrate users to higher value subscriptions, which, makes sense for recurring revenue.
Get that ARR up.
Yep. And they're using their own Adobe Experience Cloud, we'll get to that, to market these products better. Offering free versions or trials alongside premium ones is key too.
Like with Express.
Exactly. And those generative credits for using Firefly features. That's a clever way to tie the subscription value directly to using their latest AI tech and encourage people to try it.
And gets people hooked on the AI features.
Potentially, yeah. Plus, adding more collaboration features helps them expand beyond just individual creative pros to teams and businesses. Their sales approach reflects this too, using partners for team licenses and direct sales for big enterprise deals.
But it's not all smooth sailing, presumably. There must be challenges.
Oh, absolutely. The pace of tech change is relentless. Competition, especially in AI, is incredibly fierce. And they constantly need to innovate and ensure the market actually wants and adopts these new AI tools and workflows. It's a high-stakes game.
Okay, that gives us a good handle on digital media. Let's shift gears to digital experience. What's the focus there?
So digital experience is all about the tools businesses use to manage and deliver, digital experiences to their customers. Think marketing automation, analytics, content management, e-commerce, personalization. It's about enabling the digital transformation companies are going through.
The B2B side, essentially.
Largely, yes. The core is the Adobe Experience Platform, which acts as this central foundation for customer data and AI-driven insights. Then they have specific solutions built on top for data insights, content, commerce, workflows, customer journey management. the whole suite.
And the market for that must be huge too, right? Every company needs this stuff now.
It's massive and growing fast. Adobe's strategy here is, again, to be the leading provider. They really push the Adobe Experience platform as their key differentiator, that ability to unify data and personalize experiences at scale.
The report lists a bunch of general differentiators too. Anything particularly stand out?
Well, things like performance, security, scalability, those are table stakes for big enterprise clients. But they also emphasize their strategic partnerships, the usability of their tools, flexible pricing, customer service, their brand reputation, data governance features. It's the whole package they're selling.
And they mentioned digital learning services. That sounds important for these complex tools.
Very. You can have the best tools in the world, but if people don't know how to use them effectively, it's pointless. So they offer extensive training, certification, support for both their customers and the partners who help implement the software. It's crucial for adoption and getting value.
Right. Okay. And the third segment, publishing and advertising. That sounds a bit different.
It is, yeah. It's sort of the home for some of their more legacy or specialized products, things like their e-learning software, tools for technical document publishing, web conferencing.
And the really foundational stuff.
Exactly. Adobe PostScript and PDF still fundamental in printing and publishing, and also their Adobe advertising solutions.
So who's the main market for this segment?
It's more niche. Graphics professionals, traditional publishers, organizations with very specific needs, particularly around high-quality, reliable print production.
And how does Adobe see its future? It seems smaller than the others.
It is smaller, and the revenue actually went down slightly last year, but they believe it's well-positioned for the industry's shift towards fully digital printing workflows. Those core technologies, PostScript and PDF, are still deeply embedded in many industries.
Okay, that paints a clear picture of the three pillars. Let's switch over to the financials now. How did Adobe actually perform in fiscal year 2024? What are the headline numbers?
Pretty strong overall. Total revenue hit $21.51 billion. That's up 11% from $19.41 billion the year before.
Solid growth.
Very solid.
Yeah.
And the really key number is subscription revenue. It climbed to $20.52 billion. That's 95% of their total revenue.
Wow.
Yeah. And it grew 12% year over year. It just underscores how incredibly successful their shift to subscriptions has been. Stable, predictable revenue.
Absolutely. How did that growth drill down across those segments we just discussed?
Digital media was the main driver, as you'd expect. It brought in $15.86 billion, up 12%. Within that, Creative Cloud generated $12.68 billion, up 10%. And Document Cloud actually grew even faster, up 18% to $3.18 billion.
Document Cloud is really accelerating.
It seems so, yeah. Digital Experience also had a good year, up 10% to $5.37 billion. The only one that dipped was publishing and advertising, down 8% to $275 million, reflecting its more mature nature.
And geographically?
The Americas remain their biggest market, bringing in $12.89 billion, also up 11%. So broad-based growth geographically, too.
What's driving this performance? Why are the numbers so strong, especially in digital media and experience?
Well, for digital media, the report points to just sustained demand for Creative Cloud and Document Cloud as everything becomes more digital. People need these tools. Plus, they mention strong customer engagement and success in moving people onto those higher value subscription tiers we talked about.
Right.
And for digital experience, it's primarily growth across their various subscription offerings. More businesses signing up or expanding their use of Adobe's marketing and experience tools.
Okay, let's get into some more specific metrics. What about costs and profitability?
Okay, so cost of revenue is pretty flat, around $2.36 billion. But operating expenses jumped quite a bit, up 19% to $12.41 billion.
Oh, why such a big jump?
The main reason was a one-off item. That $1 billion termination fee they had to pay when the Figma acquisition fell through.
Ah, right. That stings.
It does. But even with that significant charge, their net income still grew slightly, up 2% to $5.56 billion from $5.43 billion in 2023. And the cash flow from operations was strong, up 10% to $8.06 billion.
And that RPO number, remaining performance obligation.
Yeah, that's a key one for future visibility. It grew 16% to nearly $20 billion. $19.96 billion to be precise. That's contracted revenue they expect to recognize in the future. A very healthy sign.
Okay, looking specifically at the income statement then, gross profit must be pretty high with that low cost of revenue.
Extremely high. Revenue of $21.51 billion minus cost of revenue of $2.36 billion gives you a gross profit of $19.15 billion. Huge margins.
Wow, and operating income.
That's the gross profit minus those operating expenses.
Yeah.
So $19.15 billion minus $12.41 billion leaves an operating income of $6.74 billion. Still very substantial, even with the Figma fee impact.
And taxes, how did that play out?
Their income before taxes was $6.93 billion split between domestic and international sources. They booked a tax provision of $1.37 billion for the year.
Got it. Let's glance at the balance sheet. Anything notable there? Liquidity?
Yeah, they look very healthy.
Yeah.
As of the end of the fiscal year, they had $7.89 billion in cash equivalents, and short-term investments. Solid cash pile. And net trade receivables were about $2.07 billion.
Okay. And the cash flow statement. We know operations generated a lot of cash. What about investing and financing?
Well, the summary notes a net outflow for financing activities of $7.72 billion. The main use of cash there was buying back their own stock. That was partially offset by issuing some debt, some senior notes.
So spending heavily on buybacks.
Very heavily. They also paid $1.73 billion net for income taxes during the year and about $143 million in interest. Investing activities aren't detailed in the summary, but we can estimate free cash flow.
Right. How do we figure that out roughly?
You take the cash flow from operations, that $8.006 billion, and subtract capital expenditures. The report doesn't give an exact CapEx number here, but it does mention depreciation and amortization was $857 million. For a software company, that can sometimes be a rough proxy for ongoing investment.
So maybe around $7.2 billion in free cash flow.
Yeah, roughly in that ballpark. A very significant amount of cash generated after maintaining the business.
Okay, so they're generating tons of cash. How are they returning that value to shareholders? You mentioned buybacks.
Exactly. That seems to be their primary method right now. The report explicitly states the goal of the stock repurchase program is to minimize the dilution caused by issuing shares for employee compensation, stock options, RSUs, things like that.
Offsetting stock grants.
Primarily, yes. But the scale is significant. They mentioned spending $9.57 billion on buybacks back in fiscal 2022, just for context. And it continued after fiscal 2024 ended. They entered into new agreements to repurchase another $3.25 billion worth of stock.
Including an ASR, an accelerated stock repurchase.
Right. A $2.75 billion ASR was part of that, which means they got an initial delivery of about 4.5 million shares up front. It signals confidence and gets the shares off the market quickly.
Definitely a strong signal. What about dividends? Any regular cash payouts?
No. The report says that while their credit agreement doesn't strictly forbid dividends, they don't anticipate paying any cash dividends in the foreseeable future. The focus is squarely on buybacks for returning capital.
Okay. So looking forward now, how does Adobe frame its own future prospects and the potential bumps in the road?
Well, you get the usual disclaimer about forward-looking statements involving risks. But the core message is continued focus on digital media and digital experience. They clearly see AI and the broader digital transformation trend as major growth drivers for them.
Makes sense. And the challenges they're keeping an eye on.
They're realistic. They know they need to keep innovating like crazy because technology changes so fast, and competition, especially around AI, is intense. Managing risks related to data privacy, security, intellectual property, that's huge now. And of course, the uncertainty of the global economy always looms.
But financially, they seem well equipped to handle those challenges.
Yes, they state pretty clearly that their current cash, expected future cash flows, and their available $1.5 billion credit line, which was undrawn, should be enough to cover their needs. They feel they have sufficient liquidity.
And they list out some specific key risks, too.
Yeah, briefly. Things like failing to innovate, losing ground to competitors, including AI startups, damage to their brand, acquisitions not working out, like Figma perhaps, service outages, economic downturns, changing regulations on privacy or AI, not protecting their IP, and changes in tax laws. Standard big tech company risks, essentially.
Right. So wrapping this all up, the 2024 report paints a picture of Adobe as a company with really strong subscription momentum, especially in those core digital media and experience segments.
Definitely. Generating significant cash.
Yeah, using that cash heavily for stock buybacks and betting big on continued innovation, particularly AI, to navigate a really competitive landscape.
That sums it up well. But like we said, this is just a snapshot from the annual report. You'd want to keep watching their quarterly results and announcements for the full evolving story.
Absolutely. And maybe a final thought to leave you with. Given Adobe's huge investment in AI and how much they rely on those subscription models, what do you think poses the bigger challenge to their future success? the pace of technological change and competition, or potentially shifting user expectations about value and pricing in these creative and digital experience markets. Something to think about. Thanks for joining us for this deep dive.